Hello, guys. This is Mr. Market Switch, and I'm super excited today to be here with you guys. Uh, we are going to start in a few minutes. Let's give some few minutes for other people to join us here before we proceed. Guys, for those who the first time for them to join us in this presentation or in our program, we are having a very wonderful program which enhances us to become more effective and more productive in our trading. And it's very important for each one of you to understand that forex requires you to learn every day. We learn every day, guys. We don't stop learning. We don't stop learning. If you want to become a successful trader, you must keep learning. We keep learning. We trade, we learn. So make sure you keep learning while trading. Learning never stop if you want to become a successful trader in the forex market. Never stop learning. You keep learning new stuffs, you keep learning new things every day, every now and then, so that to become more productive in the market. If you stop learning, that means you start dying. Stop learning in the forex market means your death is near. Your death is near. So this is very important, guys. It's very important, and that's why I'm here for you. I'm here, guys, to take you through trading techniques and share my experience with you, so that you can become a successful trader. We are all learning. I'm also learning, and I'm also sharing what I learned or what I've learned in the forex so far, so that, guys, you may also become a successful trader in the forex market. All right, guys. Yesterday we had a wonderful presentation concerning trending market, trending and ranging market. Today we have some new stuffs. We are going to check out. Today we have some new stuffs that we are going to check out. Maybe in order for me to know if we are together, can you hear me clearly, guys? Can you hear me clearly? If you can hear me, please write something on the chat page. If you can hear me, please write something on the chat page. You can go on the chat and just, yes. Thank you, Mr. TM. Mr. TM is saying, I hear well. Thank you. Everybody else, can you hear me, guys? Everybody else, can you hear me? All right. Loud and clear. Thank you, Mr. Dale. Loud and clear. That's great. You see, guys, I'm still in the office. And I'm here with you for about 2 hours. Forex trading is my full-time job. It's my full-time career. For those who don't know, I quit my job. I was employed by the government, but I decided to quit my job, and I decided to become a full-time trader. It's my 4th year now trading in the forex market full-time trading in the forex market. So when I say I have something to share with you, you must trust me. I have something for sure that can help you guys, because I've been trading the forex market for 4 good years, full-time trading in the forex market. So I know somehow I can say I know what it takes to become a forex trader. I know uh, 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 what it takes to become a full-time forex trader. So I've taken my time to share my journey, to share my experience in the forex with you guys. It's very important. It's very important to learn something uh, from someone who has been there for some times. If you can learn something from me, guys, that will be something good for me, because I feel good when I have someone learning something from my experience. I feel good when I have someone learning something from my experience, and we learn from each other. So if you have something that I can learn from, guys, you just share it. Share with everyone. Share with everyone. It's very important. Share with everyone. It's very important, guys. So today, we are going to stick on the same stuffs that we discussed yesterday. I wanted to introduce something new today about candlestick patterns, but I see we still have more room to discuss about trending market and ranging market. And maybe today, for those who attended yesterday presentation, for them it will be very clear today, because we are just going to pass through the same examples and maybe add some few new examples. But if we go through the same example that we discussed yesterday, you might see something very interesting, guys. Very interesting. Remember yesterday we discussed about trending market, and we went through this pair here, guys. Went through this pair here, GBP USD. Remember GBP USD, guys? Do you remember GBP USD? We discussed about this yesterday. For those who were there, we discussed about this, and I want to show you what happened after that discussion. So, guys, this is a trend line. We drew this trend line yesterday. We drew this trend line yesterday, if you remember. We drew this line yesterday. This one was not there. The market was just here. The market was just here, guys. Yesterday, the market was just there, and I told you guys that you should buy. You should look for a bullish market or buying opportunity where the market hit on the trend line, because this trend line here, guys, the trend line that you see here, this trend line is a dynamic support of the market. Dynamic support of the market. Remember, the market created this shape here, this pattern here. It's what we call, or it's what we regard as a double bottom, or we can call it what? W pattern. The market created this W pattern down here, guys. You see this W pattern here, and this one here was a neckline. This one here was a neckline. Let's see it clearly. This one here is a neckline of the W or double bottom pattern. This one here, this area here, see this one here, this one was a neckline. So the market created this pattern. The market created this pattern. This is a W pattern or double bottom pattern, although it's not on the same point. This bottom here is not on the same point as this pattern. There are different type of W pattern or double bottom pattern. So, guys, don't be confused. Don't be confused with these patterns, because there are different type of W patterns. You might find another pattern just like this one, another pattern will be seen like this. Will be seen like this. You see, this bottom here is not on the same point as this one here. So you can see something like this. But this one here is another one. You see, it looks like that, not like this. So this one is also we can regard this. We can regard this also as a double bottom or W pattern, and the same apply to this one. The same apply to this one, guys. Is also a what is also a double bottom, or we call it W pattern. Is also a bottom or W pattern. So the market created this kind of pattern. Then we had this impulse move. You can see this impulse move, or we call it advanced stage of the market. This is the advanced stage of the market. After the breakout on the neckline, you can see the market, multiple retests on the neckline, multiple retests. This one was a retest, another retest here, multiple retests, number one, number two, multiple retests on the neckline before another movement. So you can see, guys, it was a clear and uptrend. So yesterday the market was at this point. You see this candle here? The market was here. And I told you guys, when the market hit this trend line, dynamic support, when the market hit just there, just take a long position, just take a buying order. And you see, for those who took buying order here, you are now about 86 profit pips. You are now about 86 profit pips, guys. And I told you another reason. For you to buy GBP USD. I told you to go back and look at the monthly. Just take a look at the monthly time frame. You see the market is just at the major support on monthly time frame, and it's now starting the upward movement, or it's now making a reversal movement, guys. So you can also see the market creating a very clear W pattern on this larger time frame, which is a monthly time frame. That is another confirmation, guys. It's another confirmation. But I'm not asking you guys to find the end on monthly time frame. After confirming, after looking at more confirmation on monthly time frame, it's now a time for you guys to come back on smaller time frame, like 4 hours time frame, 1 hour time frame, or even 15 minutes time frame, just to check for the end. Now you can see the re-end. If you missed this movement from down here, up here, you can see the market doing a pullback to the dynamic support, or to this point. Now it's a re-end. You find the re-end somewhere there after this pullback. After this pullback, you find the re-end for a long position. Remember, GBP USD is a clear uptrend on smaller time frame, although when looking at a monthly time frame, it is just at the initial stage of a reversal after the market hit the lowest price of all the time. Remember, the market went down here and tested the low of all the time. Maybe I should remove these things so that you can see what I'm saying, guys. Let me remove all the stubs so that you can see what I'm saying, guys. You can see the market went down and it tested the low of all the time. Actually, it is just the law of the all the time, although it's just a little bit higher, from this one here. Or it was 2000. It was 2016 when the market hit the low of all the time. And in 2019, the market just tried to retest or to test the same low that was hit by the market in 2016, but there was a rejection. And this rejection happened just after the market created a pin bar on monthly time frame. You see a pin bar. Tomorrow we will discuss more about the impact of reversal candlestick patterns or profitable candlestick patterns. We'll discuss more about profitable candlestick pattern and tomorrow presentation. But today, let me just discuss about the trading market. And you see, guys, we had a confirmation here that we are now facing a reversal market. And when looking at the daily time frame, you see the market already made a move, and you can see this W pattern, very clear W pattern here on daily time frame. But when coming to 4 hours time frame, which is our time frame that we use for most of our analysis, you can see what the market is doing, guys. The market has already created a re-end, and for those who took this trade yesterday, you are now about 80 plus pips, 80 plus pips in profit. I took this trade with a bigger lot size, but I decided to take some partial profit. Guys, there is a way that you can take a partial profit from already running trade and leave the same position with a smaller lot. Maybe if you entered this trade with 0.25, then you can take 0.2 profit and leave 0.05 running, 0.05 of the same position running. I'll come to teach you next time about this, how you can take partial profit, guys. So this is GBP/USD and keep moving up. It keep pushing up. We are still going up, guys. We're still moving up. Now we are 90 plus pips, guys. We keep milking this. Guys. So what I was saying is, when trading on uptrend, guys, you have to consider these areas. These areas are very crucial, guys. Where the market making a high, this one we regard as a high. This one here is a high. The market creating a high, and this is a high. This one here is a high low. After high low, which is high low, of course, is a re-entry point from dynamic support. We have another high there. We have another high, guys. This is another high. The market creating another high. Then after this high, you see the market now creating another high low, which is a re-entry. High low is a re-entry. High low created on the dynamic support is a re-entry. So that's why I took this trade there, guys. Wow, you see GBP/USD pushing high. Now we are now about 100 pips. We are moving just about 100 pips, guys. So high low. High low is created as a result of pullback, and high low is where we can get the re-entry. High low, high low, guys. That's how we move. Guys. That's how we move. And that's how we take the trade on uptrend. So this is uptrend, guys, a clear uptrend, a clear uptrend. I expect this thing to continue. I expect this thing to continue. The market will now create another high from this point. The market will create another high. Then after that, expect the market to create another high low somewhere here. Then it will keep on just creating that. So if you want to become a successful trader, a successful trending market trader, remember, when trading the forex market, trend is your friend, guys. Trend is your friend. Remember, the market always moves in 4 stages. The market always moves in 4 stages. Yesterday, I shared the 4 stages, guys, if you remember. Yesterday, I shared the 4 stages, 4 stages of the market, if you remember. And I told you guys the market is always in either of the 4 stages, in either one of the 4 stages. The market will be either in accumulation stage, or advancing stage, or distribution stage, or declining stage. Now, if you take a look at this one, the market is now in an advancing stage. After this accumulation stage here, this was an accumulation stage, then we had an advancing stage. Advancing stage is now the uptrend of the market. So you see the market now creating high low, high low. At this point, it will create another high, then high low. The high low will be now your re-entry. So this is how you keep adding position on a trending market. You keep adding position, guys. You keep adding position on a trending market. You keep adding position until now you make more money and more pips on that trending market. So guys, that is how we make money on a trending market. This is GBP USD. You keep milking just like that. Now let's take a look at another pair, guys. Here we have this is Euro USD. This is Euro USD. I had a bigger lot size on Euro USD with 0.25 to position 0.5, and I took partial profit and just leave 0.05 running for swinging. On Euro USD, we have nothing to discuss here because we didn't look at it yesterday. Another pair that we can just take a look at is GBP CAD, guys. GBP CAD. Remember when we discussed about GBP, I told you guys to take a look at the other GBP pairs as well. Now, take a look at the GBP, guys. Take a look at the GBP. The same thing we see on GBP USD is just exactly the same thing that we can see on what? It's exactly the same thing that you can see on GBP CAD. On GBP CAD, this is what we see, guys. This is what we see. We have this W pattern here. We have this kind of W pattern formed here by the market. You see this type of W pattern is different from the one we saw on what? On GBP USD. This one now is just look this style. This one, look that style, guys. That is a W pattern. That is a W pattern, guys. We see there. And now you can see the market trending. See the market trending, guys. See the market trending. Just going up. See the market going up. See the market moving up, guys. See. Now, this one is very interesting, guys, because you see this one was supposed to be our neckline. Now this is now our neckline. But on this GBP card, we do not have a clear retest. We do not have a clear retest on this neckline. But we have this one here. We have this pullback here of the market. We might regard it as a retest on this neckline, because neckline is not just a point or the price, it's just the area. So we can just regard that one. But we have this thing here, guys. You can see this. You can see this. We have this touch on this and this. We do not have a clear touch on this one here, but we can just consider this. We can just consider this as a high at this point. Then we expect a pullback on this. We expect a pullback on this. Maybe this market will keep moving up to this point. Then we can expect a pullback. We can expect a pullback on this dynamic support. Then thereafter the market keep moving, creating a high, then high low, high low. So that is very clear, guys. It's another part. It's another pair that we can expect the same behavior to occur. Now let's take a look at Euro GBP. Euro GBP, guys, because Euro GBP is a clear downtrend now. It's a clear downtrend. You see, we had a triple top formation on weekly time frame, and we also had a triple top formation on monthly time frame. But coming to 4 hours time frame, we have this clear downtrend there. We have a clear downtrend there, guys. So you can see a clear downtrend. But we see this pattern here. You see this pattern here, guys. This pattern here is very clear. See this pattern. This is the head. You can regard it as a left shoulder, right shoulder there. Then we have this falling. We have this falling of the market. See, guys, we have a clear falling of the market there. A downtrend. This touch. You see the market keep falling. So, guys, this is a downtrend. Now, we just use the same strategy when trading on this kind of market, because also on downtrend we create a high low. We have this high low here. Then we have low. Have high low. The market creating high low, and we have low. This low here is not yet complete, because after this low is complete, we should expect the market creating another high low. Then we have low. See, this is how the market will be moving. So on this high low, low, high low, since this is now a downtrend, since that one is a downtrend, so what we expect, guys, is to find re-ent on downtrend, re-ent on high low. This high low, this point is where you can find the re-ent. Here we have head, left shoulder, right shoulder. We regard all this as a right shoulder. Then we have this falling. We have that falling, guys. We have that falling. So the market creating high, low, high, low. That's what we expect, guys. So that's how we trade. That's how, guys, we trade on a downtrend. After identifying the reversal pattern, then we just take a look on how the market will be moving on a declining stage of the market, which means a downtrend, or advanced stage of the market, which means an uptrend. So that's how you guys on the declining stage of the market, which is a downtrend, or advanced stage of the market, which is an uptrend. I hope that is clear, guys. If we have any question there, maybe I should take some few questions before we proceed. Maybe I should take some few questions before we proceed, guys. Before we proceed. few questions, guys. Some few questions. May I receive some few questions? You can just use your chat page to ask some few questions, or if you want to ask direct from your from your Zoom, please, you can just raise your hand, or you can just notify me so that I can give you permission to speak. If you want to ask direct question, how can I control fear and greedy when taking trade? Mr. Patrick, that one is next topic that we come to discuss. We have not yet reached at that one because that is what we call market psychology. We have not yet come to that. It's market psychology and emotions. We'll discuss that, how to control that in the when we come to that. Thank you. Mr. Musa, Mr. Well understood. No ambiguity from this side. Thank you. Thank you. Understood. Understood. All right. Any question, guys? Anyone with any question? Guys, you know, you must keep it as simple as possible. Don't complicate things. Don't complicate things. If you complicate things, guys, it will be very difficult for you. Just do analysis and take your trade with confidence. Make sure you understand which method you are using when analyzing the market, and focus on that, guys. Mr. Musa, are we clear now? Mr. Musa Nyabusane, I want to make sure if we are clear. If you can hear me clearly, Mr. Musa Nyabusane, please. You can just reply there if you can hear me clearly. Oh, thank you. Okay, guys. Now I think we need to proceed on something else. We need to proceed on something else. Maybe we can just take a look on some. Mr. Herod is saying greedy is killing. Yeah, if you have greed, that is a problem. We'll come to discuss on how you can control your greed when we come to market psychology and so on and so forth. All right, guys. All right, guys. Okay. Let's go now to let's share now this one. Let's now share this one. Okay. So what GBP USD is doing? GBP USD is now we are now at 100 pips. GBP USD is now standing at 100 pips, guys. As we are discussing now, we are now there. Maybe let's just take a look at another pair. Take a look at Euro JPY. Euro JPY, guys. Let me take a look just here. Few minutes. I want to see. Okay. No, so bad. Okay. Okay. Okay, guys. Take a look at Euro JPY. This is Euro JPY. We have the same scenario on Euro JPY. Euro JPY is an uptrend. One of the pair that guys, I think it's going to give us a lot of money in the future. Euro JPY. If you trade Euro JPY, okay, Euro JPY. Let's take a look at Euro JPY, guys. All right. Just take a look at Euro JPY. Let me remove this one so that I can show you. Let's go to weekly time frame. Do you see Euro JPY, guys? Do you see this kind of candlestick? You know, today we are not discussing about the behavior of candlesticks. These candlesticks, when you look at these candlesticks, are not just candlesticks, guys. These candlesticks here, they speak a lot. They give us a lot of definition. This kind of candlestick here, guys, it gives us a lot of definition about the market. So you need to understand, guys. You need to understand these steps. All right, just take a look at this monthly time frame, weekly time frame, Euro JPY weekly time frame. Now condense a little bit. Now, let me tell you something about this. Euro JPY, it was a downtrend, and this downtrend here had two purposes. Number one purpose was to cover this gap. You see this, to cover this wick, this shadow here. The market had to cover this shadow. This shadow happened on January when the market opened. There was a market crash, if you remember. This was in January, if not January. This was, yeah, it was January. When the market opened on January 2019, it was 6 January 2019. The market had a crash. For those who have been trading from January, you can remember what happened on January. It was a market crash. You see, but there was another market gap that was left by the market in 2017. This was a market gap in 2017. This market gap here was never filled. So this down movement of the market was there purposeful to cover, to fill the shadow, the wick, but also to fill the gap. Remember, not all market gaps are filled just after they are formed. Some other gaps take years. You see this one? This gap here took years, about 2 years to be filled. And the market is now completely filled. The market is already completely filled. So this one gives you confidence when you see this kind of uptrend. It gives you confidence now that the market is now on an uptrend after completing the mission. The market is now on uptrend after completing the mission. The market was on downtrend to complete two missions. Number one, to fill the wick on weekly time frame. Number two was to fill the gap here. So after the market completed these two important missions, now it has to go back. Remember this what you see here, guys, the movement you see in the market, all those are the transactions that are made by big institutes or big institutions in the market. We are talking about the banks, we are talking about the commercial companies, we are talking about big guys, we are talking about the dealers making transaction in the market. So if they had this kind of transaction here, they have to fill the transaction. They have to fill the gap in order to balance the market. This is very important. You have to read about market gap and the essence behind the market gaps. You have to read about the shadow, the wick, and the essence behind. You have to understand all those stuffs, guys. This is not just happening roughly. It's mathematically calculated. So the gaps and the wick, the shadow has to be filled, guys. You need to understand that. But it just don't happen right away. Some other gaps and shadow takes years to be filled. You have to know about that too, guys. So in this case, you see the market now trending. This is a good indication that now you can now take your chances on uptrend market. So how are you going to trade this? You just use the same strategy. Just use the same strategy, guys. Just use the same strategy. Take the trades on the pullbacks as you are re-entry. Pullbacks as you are re-entry. Then after the market creating the high, just take your position on the pullback, the high-low. Take position on the high-low. So I expect this one to keep moving up, and then it will create another high-low, then up, then high-low, up, high-low, up. That's how the market is going to move, guys. So you keep adding position just like that. So this is how you can trade on uptrend. You can trade on uptrend with confidence. After convincing yourself that the trade that you are taking is indeed an uptrend, and it will not it will not disappoint you. Guys, I think that is also very clear. I was just trying to find the ranging market, maybe maybe I should consider this one. Yeah, a ranging market, ranging market pair. You can take a USD Swiss franc. Guys, if you want to trade on ranging market, a good example is USD Swiss franc. I'll consider USD Swiss franc, guys. Let's consider USD Swiss franc. Sorry. You can consider USD Swiss franc, and that is our USD Swiss franc there. Okay, this is our USD Swiss franc on a weekly time frame. Here we go. Weekly time frame. You see it. How do we now know that this is a range market? Just take your trend line, withdraw. You can see the market doing something like this. Maybe we consider from this point. You see this kind of stuffs, guys. You see this kind of stuffs. You see this kind of behavior. The market doing this kind of behavior. You see this kind of things. See, guys. Okay. See. So the market moving sideways. So you see the market moving sideways. So in this case, you can draw the highest point, the peak. You consider this highest point first. Can consider this highest point first. All right. Okay. All right, guys. So that's it. Also, you can also consider this lowest point here. Come on, man. I'm just drawing just like this. Let me just draw. I just want to draw manually. Okay. See, guys. I hope you guys can see what I'm doing here. But inside this, you see, we have just considered the highest and the lowest. But inside this, we have a condensed sideways market. Inside this one, we have this kind of condensed sideways or ranging market. See this condensed, the market touching there, touching there, and there, touching here as well. Okay. How the market is doing, but also we have this kind of stuffs here. Touch there, you can see the market behaving on this area as well. So this one and this one, this one and this one. See how the market is behaving, guys. Levels, this level here, and this level here, up there, and this level down here. So how now do we trade? We trade like this. You see how the market is behaving, guys, at this point. So if now you are trading on range market, you should consider to buy when the market hits at this point, you can take, and if you see other confirmation, you can consider to buy up to this level. And once the market is at this level, you might consider to get out and to take your profit on buying on bullish position, and then wait for confirmation of selling. If there are other confirmation like pin bars or some other candlestick reverse candlestick pattern like doji candlestick and other confirmation that you can see on smaller time frame, you might also consider to sell. But in case the market made a breakout up there, that means another target will be up here. So you wait until the market hits somewhere there, or you might consider this level as well. You see, because there are a lot of stops here, guys, a lot of stops here. So you might consider every possibility, because this one here also is a resistance. We have a resistance at this level, but we also have a resistance at this level where we might be looking for a sell or a bearish opportunity. But also, if the market hit at this point and it shows you every possibility that it's going to buy, you might consider this as your target. And once the market is here, now there is every confirmation that it's going to sell. You might consider sell at this level up to this point. If there is a breakout, you might consider this as your what? As your target, or you are taking profit on bearish market. So you consider to buy maybe at this point. If the market made a breakout and move up to this point, you might consider to buy at this point as well. When we have enough confirmation, enough evidence to buy, then you consider the same levels. This one as your target, one also that one. So that's how you trade. When you're trading on range market, is a bit complicated, but you might consider to do so if you can stick with a few pairs or one pair. If you are trading on one pair, that means you be consider these areas. You sell at the demand, you buy at the supply zone, and you consider both possibilities. Either the market, if it made a breakout of this demand zone, then this one will be another area to consider or to look at as demand zone or as your target when the market made a breakout here on the bearish market, and bullish market position or bullish market when the market had a confirmation, other confirmation that is going to buy, and you can buy at this point as well. So guys, this is how you trade on range market. Make sure you find a range market on a higher time frame than on a smaller time frame, because a smaller time frame sideways market might be considered as a consolidation and not a range market. But we find a range market or a proper sideways market on a larger time frame. It's a very clear, range market. But sometimes a range market on a larger time frame, it might look like a trending market on a smaller time frame. So you need to understand all that, guys. That it's very important to trade with higher time frame while also looking at a smaller time frame in order not to be confused or to be trapped by the market when trading. I think that is very clear now, guys, and I think now you might consider that in your trading as well. If we have any question, guys, concerning range market and trending market, if you have any question, maybe I can give you some few minutes to ask if we have any question. Any question, please? Any question? Mr. Alfred Sebastian, can you please mute yourself? Okay. Already muted. Okay, Mr. Patrick is asking, how can I use smaller time frame to enter this trade after defining BS on bigger time frame? Now, that's a very important question, because the end is the most important thing, end and exit. is the most important thing. You need to know the door, when to enter the trade, and how to enter, and where to enter the trade. So you need to consider when, where, and how when looking for the entry. It's very important. It's very important. Another question, Mr. Nelson Goncha. I'll come to that, Mr. Patrick. I'll just come to that. I'll share the screen again. Then we are going to see where exactly was the most crucial area that you could take that trade. We are going back in a few minutes. We are going back in a few minutes. Don't worry about that. Okay, Mr. Nelson Gonja is asking, on day trader, I think you mean intraday trader. What time do you enter the trade and time to leave? What time do you enter the trade and time to leave? Now let's go back to the chart again. Let me share the chart again. Okay. Wow, guys, do you see what is happening on GBP USD? We are now 100 plus pips in profit. 100 plus pips in profit, guys. Oh my God, this is what I'm talking about, guys. Remember, the same thing happening on GBP USD is also happening on GBP JPY as well. So we have the same scenario. We have the same scenario, guys. Don't forget that. We have the same scenario. You see this? You see this, guys? The same scenario. Now, let's go back to the question that were asked by Mr. Patrick and Mr. Mgonja. Now, this is now weekly time frame. We have this kind of stuffs. We have this kind of stuffs, guys. Maybe I should remove these things here. Now, we have this kind of stuffs. We have the sideways market. We now know this is a sideways market. Now, how do we enter now the market? How do we find the entry? How do we find the entry? Let's consider this area here now. Now let's go to 4 hours time frame. Let's go to 4 hours time frame. When going to 4 hours time frame, you see something like this. See, guys, this is 4 hours time frame. You see something like that. See, remember what I said? Few minutes, what I said earlier. I said that on weekly time frame we see range market, but the range market we see on weekly time frame, on smaller time frame, it might not be a range market. It might look like what? It might look like the trending market. So on 4 hours time frame, this is what we see, guys. This is what we see. We see this kind of stuffs. We see a clear trending market. See a clear trending. Consider this touch, this one, and this one. The more the touches, the more the more valid is the trending line. You see, guys. So you see, you consider this. Consider this point. So it's a range market on weekly time frame, but on 4 hours we see it's some sort of trading market. Now you consider the pullbacks on this dynamic support. You consider the pullback as a re-entry. So at this point, your entry now, where should be your entry? Your entry now should be on these areas. On these areas. Your entry should be on those areas. Now, what should be your maximum target? Your maximum target, you come now to weekly time frame. Your maximum target should be this one here, the nearby resistance on the nearby resistance on a range market that you drew on weekly time frame. This should be your maximum target. Now let's come to 4 hours time frame and find our maximum. Where is our maximum target? The maximum target is just there, guys. You see where it is? Now, it won't be easy like that to reach there. So we have to consider this kind of behavior. The market will keep forming the high highs and the high lows. So you find another another entry here where the market creating high lows. It might not be there. It might be here. So you find the re-entry. Once you have the re-entry, then you buy, you keep buying, you buy from this point, then you keep adding position on pullbacks, then just like that until you reach at your maximum target, which is that one. So if you are lucky enough, if the market rewards you and decide to make a breakout on this nearby resistance on weekly time frame, then that means the market will keep going, looking for the other resistance that we also drew on weekly time frame, which is just there, that one. I think this one is now clear, Mr. Patrick. It's now very clear. So you have to draw on larger time frame, looking for the range market. Then when coming to smaller time frame, it will not look like range market. It will look like a trending market. But you know for sure that in it is a range market on higher time frame. So you just put the mark in order to specify your maximum target, so that when you are taking the trade and deciding to hold it as a swing trade, but you should consider where to get out. So the entry should be on those areas, but the target should be according to the sideways mark point that you already set on a weekly time frame. I think Mr. Patrick, it's very clear. That one is very clear. Now, so another question from Mr. Mgonjwa: when to enter, when to leave, when to enter, when to leave. So I can use this same example to answer your question. When to enter, when to leave. Let's say you have entered a trade at this point. Maybe you have two trades. You have two trades here with 0.1. One trade, you entered USD Swiss franc with two trade 0.1. Then the market went up, and when the market was just above the previous high, high. Remember, in order for a high to be valid, it has to be somewhere above the previous high. So this one here is high, but in order for the coming high to be a valid one, it has to be somewhere above, and that's why you can see the next high is somewhere above the previous high. So we can call it now a high because it has accomplished all conditions to be a high, considering this one. So this one is a high. It's a high. Now let's say now you took two trade at this point. This was your entry. You have two position, 0.1 buying position, USD Swiss franc. Now the market kept on moving, and it created a high. It passed this high here. Once the market passed this this previous high, now I should advise you guys, if the market is now above the previous high, I should advise you to take some profit on the position that you had. Take some profit on the position that you had. Why? Because the market will now make a pullback before creating another high. And a pullback, that means the market will just move some pips down, not up, not to this level, but some pips down, and then up again to create another high. So when to leave now? After the market has just passed some few pips above this previous high, you can now decide to take maybe one position out of the market. Take one position out of the market and keep holding a single position. So the market will just move down, a pullback, then up again. Remember, you have one position. Once the market has made a pullback down here, you can now put put another position. You can now take another trade with the 0.1 into the market. So you took one position in profit when the market was here. Now the market made a pullback to this point. That means the re-end. You can now decide to take another two position. You can now decide to take another two position. Take another two position with the 0.1. Now you have three position running. Once the market is at this point, you can now take profit with the two position. Just leave for another position. The one that you left, the other position that you left running, you can just keep it keep running until it hit the maximum target. But on the way, you keep taking the profit in order to meet your daily goals. Do you see what I mean, guys? So this is how you enter and you leave the market. This is how you enter and leave the market. I think, Mr. Mgonja, I have answered your question. If it was not very clear, you can ask me so that I can explain again. Okay, Mr. Mgonja, Mr. Patrick, are we clear on that? I want to know if we are clear so that we can. Okay. Mr. Patrick Jayara, I think, Mr. Patrick, for your second question, you should go back to our to yesterday presentation. We explained very well. We explained very well how to identify trending market. We explained very well about that. Okay, Mr. Okay, yeah, brother. Thanks. Thank you, Mr. Patrick. Mr. Mgonja, are we clear? Okay, thanks, clear. Nice. Mr. Victor is asking, what time frame is best on short-term trades? I don't think if Mr. Musa, I have got your question very clear. Maybe you can ask in a simple way because it's not clear. Your question is not clear, Mr. Musa. Put it in a clear way. Put it in a clear way, please. You can put it in a clear way, please, Mr. Mr. Musa. I really want to answer your question, but let's put it in a more clear way that I can understand. I really want to answer your question, but please put it in a more clear way. Okay, guys. Okay, thank you, Mr. Dale. I can see. Okay, I can see your appreciation. Thank you. This is what we do here, guys. This is what we do here. When I say you should subscribe for this program, I mean you should subscribe because it's only 25,000. It's only 25,000 per month. So there are a lot of stuff to learn here. A lot of stuff to learn here. Mr. Nelson Mgonja, I'm confused on how to differentiate between range market and what? Mr. Mgonja, I think this is your first time to be here. Have you gone through our previous presentation? Yesterday we had a presentation. If you go through that presentation, you will clearly understand how to identify range market and trending market. It's very clear. It's very clear. So I should advise you to go through yesterday's presentation, and then if you keep having some trouble in understanding range market and trend market, you can check me. You can check me inbox, and I will help you. Yes, we upload these videos on YouTube. All presentations are on YouTube, guys. Just go there. You can find. You know, the advantage you get by being here is you can ask me direct. You can ask the question direct to me. But if you are not here, you cannot ask me the question direct. But if you are here, you enjoy everything, guys. You enjoy everything. All right. And a question, in 4 hours or higher time frame, the market takes a long time. How can we stay in market? What do you mean when you say the market take long time? You see, guys, it depends on what kind of trader you are. The market does take a long time. Do you remember GBP USD? How can you say GBP USD took a long time? Just yesterday, today we are about 100 plus pips. What do you mean by taking long time, guys? What do you mean by taking long time? We are 100 pips up, guys. We are 100 pips up. See? So you should know how to consider this, guys. It's very important. It's very important. It's very important. Don't be confused. Don't be confused. Don't be confused, guys. Don't be confused. Okay. Of course, we have some trades just acting or just going against, but you should trust the process. You should trust the process. All right, another question. Can we be intraday or swing? Yes, you can be. You can decide yourself to be intraday or swing trader. It's just up to you, guys. It's up to you. Depends on the kind of capital you have, how much you have. If you want to be a swing trader, that means, guys, you need to have somehow about 2,500 USD account and above to be pretty much better for you guys. But if you have smaller capital, it's better to be an intraday trader, to be a scalper, and so on and so forth. All right, guys. So I think we are done. We are done for today. We are done for today. Remember, today we had something new to discuss. It's just to remind you guys about what we discussed yesterday, trading market, and so on and so forth. So I hope by now you're doing great, guys. We're doing great. I think we will have no trouble in trading and ranging market. God bless you, guys. See you tomorrow. Tomorrow I'll be having a new package. We'll be discussing about candlestick pattern. So guys, see you tomorrow. Thank you.